If you're a seasoned real estate investor, then you're probably familiar with the dilemma of balancing your non-owner occupied properties while adding more. This is particularly tricky when you have more than 10 properties because lenders are looking at all of the real estate loans on your credit report and they're factoring your debt service ratio on all of them. If the bank says you're not debt ratioing, then they're not going to lend to you. You have to remember that a lender is only counting 75% of your gross rents as qualifying income. Let's talk about some strategies and how to overcome some of the obstacles that you're facing or will face as a real estate investor. Blanket loans are perfect for real estate investors who are building their portfolio. Take all of your existing properties, up to 25, and refinance them under one loan. While doing this, if you haven't already put these properties under your LLC, this is a good time to get these switched out of your personal name and get them in under your LLC. You definitely should run this by your tax advisor to make sure that you're aware of any tax consequences that may exist. Once all of your properties are under one loan, all of the loans that they were previously under will show as paid off, which provides for a good jump in your credit score, which is a nice little perk. Once you have rolled all of these single investment properties into a blanket loan, they are out of your name. So if you're planning to buy more properties, one at a time, be sure to talk to your broker and finance those properties conventionally until you have 10 or so to roll into a blanket loan. Then it's just a matter of rinse, wash, and repeat. A lot of investors are always trying to find off-market properties and are talking directly with other investors who may be trying to unload multiple properties. A blanket loan can be used to buy multiple properties at the same time or a whole portfolio as well. This is a really ideal way to quickly increase your doors and get a good deal on these properties in the process. If you're wanting to pull cash out while refinancing, you can typically pull out up to 75% cash equity. You can also do what's called a mixed transaction, where you're both purchasing and pulling out cash. It's important to note blanket loans can only be used on 1 to 4 unit properties, so you're not going to be rolling a bunch of apartment buildings into a blanket loan. If you're trying to do that, there's another solution for that. Call me. If you want to work with us on your blanket loan, here's a couple basic guidelines. Remember, up to 25 1 to 4 unit residential properties under each blanket loan. The minimum loan amount is $400,000 up to $3 million. So this is really ideal for somebody who maybe has 12 to 15 or more properties that maybe you owe $150,000 to $100,000 on each one. If you need to split into 2 or more blanket loans to stay under the $3 million cap, that's easily done. So if you have 50 properties and owe a total of $9 or $10 million, give us a call. We'll get you taken care of.